The shortest MBA, April 5th. 2020 MBA equals sign management by absence. Massive bank account. The entrepreneur must have dictatorial control over his firm, or he'll lose it. Stakeholders aren't necessarily major customers or major shareholders. If one does not have sales, one does not have a business. Don't major in minor things. Put first things first. Begin with the end in mind. Markets are not 100% rational or efficient. If they were, how could traders say, manic Mr. Market, or locate underpriced stocks? Entrepreneurs must adhere to the 5 commandments of business: need, entry, control, scale, magnitude, and time. It's tougher to meet these 5 criteria in the corona economy. If the entrepreneur feels strong certainty and confidence, he/she can use debt, leverage, or other forms of leverage. One way entrepreneurs make money is with phantom cash flow from their real estate. The customer is always right until they are wrong. Branding would slash should be better than SEO or advertising. Record in a journal the results of your real or imaginary portfolio of stocks, interest rates, and major news and market indicators for at least a month. Contingency plans, backup plans, marketing plans, business plans, emergency plans, mission statement, budgets, and a thorough FAQ for employees, investors, and customers all have their place in a venture. Systems ensure a business can be run by employees without the presence of the entrepreneur. An entrepreneur and investor must be familiar with a balance sheet and an income statement. If you are not familiar with these accounting forms, go to YouTube and learn about them. Create a balance sheet and income statement for your finances using Excel. No excuses. Know as much about your target customers as necessary before launch. Have customers and know where to reach them before you launch. The shortest MBA. Part 2. August 30th, 2020. It doesn't matter how good your product is if it is not surrounded by a solid rest of the company, using Google Alerts, Yelp, etc. Are good, but have honest talks with your best customers about your products and their entire experience with your company from where they found out about you until after they completed their most recent purchase. Having clear objectives and effective systems you and your employees can do are probably better than goals and unfocused, inconsistent, massive action. Mindset is said to be better than a set of goals. Go big or go home, for good or for bad, has been a mantra among large corporations. Cost-cutting and raising prices to widen margins is one way companies attract investors. Employing artificial intelligence, and of course clear online FAQs and clear YouTube videos, will allow for fewer employees. Prepare while it's easy, says Ty Lopez. Although many people, particularly young people, will listen to more rosy and socially acceptable authorities. The art of large-scale diversion, disinformation, and other psyops are as important as ever today. Most won't listen. Convenience is a strong selling point for entrepreneurs. But convenience could put the average consumer in the poorhouse. Use web, that is Google, analytics to monitor what is working and/or popular with your customers and leads. You might find it useful to conduct quick surveys of consumers in your niche. Most college graduates may just be hired to be salespeople or battering rams to the general public if they chose a worthless major. I am confident my readers will enjoy Aaron Clary's book, Worthless, and my ebook, Free and Low-Cost Education. Neither will break your bank. Let's turn to investing. One teacher I know asks, would you buy a $1 stock for $3 because you think the stock is going to $5? How far ahead is your time horizon to hold your shares? Would a near-term setback or a rumor shake you out of a share? Are earnings and/or dividends increasing for the company? What is the PE ratio of each company you're looking at? Are you familiar with much options terminology or strategy? The above isn't intended as advice. These are questions the author has found helpful to answer.